Good morning. This is your weekly update with Jim Stewart. I'm the Chief Investment Officer here at Worth Asset Management. Today is August 7, 2023, and I'm going to go over your three threes for the week. I'm going to first look at the top 10 major asset classes, their performance, and how we're positioned. Then I'm going to take a look at the chart of the S&P 500 and look at the support and resistance zones for that market. Then I'm also going to look at the top three market movers for the week. So let's jump on in.
Okay, let's go over the top three market headlines from last week. It was a down week for most of the market. The credit agency Fitch came out and downgraded U.S. credit from AAA to AA+. That took the markets down on Tuesday and Wednesday. On Thursday, we had Amazon and Apple being the two biggest companies to report. Amazon was okay, and Apple wasn't. Their sales were weak, which is one of the largest companies out there and one of the biggest components of the indexes, brought the indexes down on Thursday and Friday. And to finish it, the jobs data came out on Friday. Non-farm payrolls was at 187. They revised the previous month, so that kept the markets down for the week. All right, let's look at the top 10 asset classes, their performance, and how we're positioned. It was a down week, like I said, for most of the market, and so we had some changes. The U.S. dollar turned to bullish on a short-term basis, and the bonds and most of the equities, if they weren't already bearish, turned bearish for the short term, with commodities being the lone holdout there on the bullish side. If we zoom out on an intermediate term basis, the only change was the US dollar, which is now short term and intermediate term bullish, where everything else remained the same. So most of the equities still remain bullish on a intermediate term basis. All right, let's look at how we're positioned on the S&P 500. Here are the support and resistance zones. We tapped the top end at 4,600, and then after last week with the downgrade, we are trading inside that resistance zone. We will probably bounce around it here until we get some more news on either the inflation front at the end of this week, which I'll go over in a minute, or we get some positive earnings or outlook moving forward. All right, let's go over the top three market movers for this week. Like I said, we get two updates on inflation. The first one coming on Thursday with the CPI, Consumer Price Index, likely rose 0.2 last month, which matches June's rate, which puts it up at 3.3 year over year on an annual basis. And that's an acceleration from last month's at 3%. So we've stopped going down. And now we've got to keep an eye on to make sure that this doesn't start going the other way, with oil prices and gasoline starting to tick up. The Fed will keep a very close eye on that. When we exclude the volatile food and energy, it was unchanged at 4.8. On Friday, we get two reports. We get the Producer Price Index, which is the inflation on the manufacturers and wholesalers. They're projected to have risen 0.2 after rising 0.1. Again, another uptick on another inflation gauge. So the Fed will keep an eye on that. And then we get consumer sentiment from the University of Michigan, and it's projected to come in at 71, which is slightly down from 71.6. We also get a lot of earnings this week from Eli Lilly, UPS, Walt Disney, Honda, and Alibaba, among others. Here's a listing of those for this week. That's it for this week. Thank you for joining us. Our next update is Monday, August 14th. As always, continue to subscribe, like, and follow, and we shall see you next week. Have a great week trading.